All right, guys, welcome back.
Yes.
Market
Yes.
Mondays.
Happy Monday.
We on the run eating.
That's a fact.
Houston edition. Shout out to
Mhm.
Slim Thugger.
That's a fact.
Yes.
Chopped it up with him earlier.
H-Town, what's up?
H-Town legend, pioneer in the game. Very important week for Earn Your Leisure. Tomorrow we have Van Jones.
Wow.
Legend
Oh my God.
in the game.
Yeah.
Legend in the political game. Used to work for President Obama at the White House, CNN show, and recently received a grant for $100 million from Jeff Bezos.
Yes.
Did you know that?
I had no clue.
He is managing a fund.
Yeah, he got the $100 million. He got the $100 million
Wow.
from Jeff Bezos.
The fun to fun play.
Yeah.
Play.
You want to talk about the power of relationships?
Wow.
That's an
Interesting story, man.
Yeah, he's responsible for distributing it to different businesses he's investing in. So, yeah, Jeff Bezos gave him $100 million. So, a lot to talk about. That's one of those classic episodes.
Hey,
comes out tomorrow.
Listen,
at 1 o'clock Eastern Standard Time.
Every now and then we do an episode. Like, we love all the episodes, but every now and then we do an episode, and when we finish, I'm like, this one's a certified classic. This one is super special. Like, we've had that feeling a few times. Steve Harvey, obviously, your episode, Ian, for sure. There's just some of them when you like, this one's gonna be special. When we finished that Van Jones episode, I'm like, this is special. In fact, I went back to listen to it as soon as we got the recording. I'm like, this is one of them. So I want to make sure everybody locks into this. It's a very important episode for the future of society, really, but definitely y'all community, definitely y'all culture. He dropped some gems, like some real actionable items about what we need to be doing.
For sure. All right, so let's get into this. Any announcements, Ian?
Stock Club call will be tomorrow or Wednesday at 9 p.m. Central. Stock Club prices are out. Get your tickets to Market Monday Chicago. Tickets are selling out soon, and I don't think prices will ever be this cheap for the tickets ever again if it's up to me. So if I made you money, please put yes in chat. Let's go.
Chicago.
You're on the way.
We are a couple weeks away. October 22nd. We're going to have Ross Mack in the building with us. We're going to have 19 Keys in the building with us. We're going to have some other surprises. Ian's doing giveaways. It's going to be a legendary night in Chicago, October 22nd. Don't wait to the last minute. Get your ticket. Click the link in the bio.
Yes.
The link will be pinned. Chicago. That's what we're focused on right now. So, Chi-Town, we will see you in a few weeks.
This is true. And you know how this works, man. This is our disclaimer. Do your own research. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making an investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Continue to do the research, continue to share the research, give credit to the people that you found it from. Love is love. Let's build community.
All right.
Yes.
Let's get into it. So put a post on Instagram last week, got a lot of attention that interest rates, home mortgage rates, were approaching 8%. In some instances, they're already 8% or over 8%, depending on your credit score, different parts of the country, different things of that nature. So interest rates are rising at very high levels. It's affecting people, especially if you're trying to buy a home, or if you're trying to borrow money and you see that interest rates, you're trying to buy a car. So interest rates are rising, right? So why are interest rates so high? And when do you think we'll see relief from these very high interest rates?
Yeah, it's a great question. We probably won't see any relief for about 18 months. The reason why, government debt is out of control. We've talked about that endlessly here. Global markets across the world are losing faith in our political system. There are too many bonds available and no one wants to buy them. And if we're going to be honest, the bond market and those who manage the bond markets are not as smart as we thought. And of course, because they want to correct this market to have a soft landing, which we won't have. Those are the 5 reasons why interest rates are continuing to be high. They want to suppress the consumer to not have as much power so that they can drive them back into the workplace and get everyone from off this whole work from home vibe. It is not working at scale, but when you factor all those things in together, we'll talk about the war that's going on later, but when you factor all those things in together, that's why interest rates have been going up, and they won't be coming down anytime soon. And also the biggest reason, quantitative easing has ended. for the foreseeable future. So now rates have to go back up. As I've said before, we are just operating in the interest rate environment that we should be in. But when our debt, well, I talked about it last week, but we are now paying more for the interest of our debt than we are national defense. That is a problem.
Yeah, you talk about quantitative easing. For those who are not familiar with that, I just want you to break that down for a little bit, because I guess the timing of what we're seeing now is important, right? So if you bought a home in the 80s and you heard 7.75 interest rate, you're thinking that's pretty good, right?
Yeah.
Based on, with the times that we were in the 80s. But hearing it now and looking at it from a 20-year time span, you realize, wait, there was a 10 to 15-year period of we were having interest rates of 2%, 0 to 2%. Yeah. And so could you just break that down for people who are not in the know?
Quantitative easing is just the government pouring in money to offset the losses that were not being produced by the economy. So when we had the crash, or the dot-com crash that led into 9/11, that led into the 07 crash, when Obama got in, one of the first things that he did was say, hey, we need to put more money into the economy so that the United States does not collapse. It's great, but it's like robbing Peter to pay Paul. Like, if I give you money at 0% interest, everyone's going to thrive. But when that is taken away, think of it like if your parent gives you $100,000 as a teenager. Kudos to my mom and dad for never doing that, because I would have blown it and acted stupid, right? But the government was our financial parent for 12 years and gave free money. Interest rates were low. Everyone was partying and having a good time. But now we have to be financial adults and things are a lot tighter. So that's essentially what quantitative easing is.
Yeah. And there's some pain, right? Like we talked about it last week. In order to reduce inflation, there's going to have to be some pain, and raising interest rates. The amount of money it's going to cost you to borrow has to increase. So they want people to slow down. So these are some of the things that we're talking about. Yeah, it sounds terrible, but these are the necessary causes, quote unquote, in order to reduce that inflation number.
And quantitative easing and interest rates, I talked about this on Stock Club call last week. They are two of the most important indicators that you have to focus on when investing. RSI doesn't matter as much. Shout out to everyone who uses RSI. I'm not alienating anybody. I've learned that lesson, right? But when you're looking at real economic indicators that matter, quantitative easing is one. Where interest rates are is number two. Yield curve will be number three. So you have to factor those in to see where we are, to know if the market generally is going to go up and go down. When we have quantitative easing where interest rates are 0 to 2%, every stock is going to do well. MyPillow.com is going to probably get an IPO, and SPAC Central. But when interest rates are higher, 4 to 9%, only the good companies are going to rise to the top.
Yeah. And it's a laggard metric, right? So if they raise it to 7.75 now, we won't know the effects of it because it happens on a month-to-month basis. We'll have to see. That's why the timing is important, right? When we talk about 12 to 18 months down the line, it's because we'll be able to see the effects of raising it in this fourth quarter, the first month. Right. And so we'll have to see by maybe summer or maybe the fourth quarter of next year to see the long-term effects of it. So that's important to know, right? The interest rates get raised now. Yeah, it affects you now, but we have to see the long-term over a time period.
I agree.
Yes, sir. Hit the like button and share.
Yes.
Hit
5
the like
friends, please.
button and share. And very important. Okay, let's talk about this. What is your trading tip of the month?
Number one, if you are not taking 300 practice trades, you are setting yourself up for suicide. Rashad, I went through something that you went through before last week. Somebody was like, hey, I had a friend to lose money trading futures, and I'm mad at you. And I'm like, I'm sorry that happened. Can you tell me how many trades he took? He took 5 trades, then went live. Never in the history of the show, Red Panda, assets over liabilities, Ranton Gems, have I ever said take 5 or 6 trades or 7 trades and go live? I never said it on Wealth Therapy, never said it at InvestFest. If you don't take 300 trades, you're going to die. Point blank.
Point there.
Literally.
All point intended.
Girl's going to leave you. Sorry. Listen, it's going to be disaster. Number 2, you want to see what the inflows and outflows are for the assets that you are trading. You can go to Y Charts. I think you can also get the information on Barron's, but Y Charts is where I lean. You can get a free trial, sign up for it. I know it's rather pricey, but we have to get out of this desire to be number one. Because I know in rap, they always say, well, if you're coming into the game, you should feel that you're better than Drake. No, you shouldn't. You got to earn that. You got to earn that you're better than Simba. and earn that you're better than Thug. I want us to stop looking at everything as a hustle and flip and put time into mastery. You don't have to. You don't have to like our takes about not having balance and then have balance. Let's compare the balances in the checking and savings and retirement accounts, though. So all I want to do. Everybody tough on the internet to ask, how much money do you have? Not saying it to be flippant or arrogant, because I know that's the take that was prevalent last year.
No 767?
No. Shout out to my guy. I don't want too much smoke from either side. Shout to Joe. Shout to Drake. Love y'all. I want peace between all my light-skinned brethren. But I think we have to stop wanting world-class riches without having world-class traits, success, habits, and routines that are locked in. You're not going to get rich trading 4 or 5 times in a day or in a week and then go live and think everything's going to work out. There's a whole bunch of people I see still copying y'all. Cool. It's not working too well. Views are down. Business model for us is still up. So my it would be 2 tips. Practice 300 trades, even on the option side, and also go to where the inflows are so you can see if the inflows are going up, like have they had for oil since the war has broken out, or if they're going down like the bond market has been since 2020.
Yeah.
I'm gonna do one podcast shot and I'm gonna take over. I don't like your pajamas. I don't like how arrogant you got, so I'm gonna do my own podcast called Earn Your Luxury.
That spinoff.
Not working. For a lot of y'all, it ain't working.
They gotta earn their compliance.
It ain't working.
It ain't working. I'll add just half of a tip. I think it's the education part, right? So even like at this level, it's like, yeah, we've had success, but I'm always trying to learn more. So I'm still reading books
every day
about options trading. I'm still like dabbling in what futures really is because I want to know the why, right? It's cool to invest and it's cool to understand what we're saying, but I want people to really understand their why. Why are you investing in that company? Yeah, we're telling you some things, but are you doing the necessary homework to figure out why you're investing in this, what you're investing in, right? Outside of it, we always say that when we're talking about anything that we're investing is like, this is what we're doing. Not necessarily saying that you have to, but you can find out on your own. So education is the other part that I think that people lack and they don't take advantage of. It's like, I'm gonna rely on these guys because they're giving us value and information. We've made money in the past from it. But what happens when these guys aren't here? Then what? Right. So that
exit strategy coming soon. Not to cut you off.
Earn your exit.
Mike, hit that trademark button. Go ahead.
So that part of it needs to be part of the trading for every month. Like, why am I doing it? What's the end goal? And what are the companies that I'm making these long-term investments in?
Going back to Desire, I was in there watching David Beckham's series about his life. Started playing pro football at 17 years old. Played until he was like, I think 37. Like, put all of his attention, effort, energy, and focus into one craft for a long period of time to then be one of the best of all time. We have to stop thinking in our culture that we're going to do something for 2 weekends and we're going to master it. I don't care if you're a party promoter. I don't care if you're a podcaster, investor, whatever you're doing, you have to put all of your time and energy into it to be great at it, to then be able to monetize.
It's true.
Or do it your way and end up losing. Shout out to the guy who lost. If you need anything, hit me up. But if you're mad at me for something I didn't say, or I know people be like, yo, I don't like the format of the show no more. Don't listen. But how is that going? I can name a bunch of other shows on bigger, quote unquote, platforms. And if I tell you the real TV numbers, NBC Universal will be upset. They aren't making you any money. If I've made you money, please put yes in chat.
So, with that being
said, when Rashad do the neck roll, that's like when Rodman be doing too much. I get it. I get it.
What is the investment opportunity that everyone is missing?
I think outside of AI, of course, Ozempic has been huge, but I think we'll go do your research on cancer treatments that are extending life and life quality by 10 to 15 years. I think that is going to be the next wave over the next maybe 6 to 7 years. Like the weight loss drug and Ozempic in that era has completely taken over. But I think decreasing morbidity rates and quality of life increases while a patient has cancer. Not that I can't say everything that I've been told, but I've been hearing there's some alternative treatments that are coming from mainstream healthcare companies that are not as damaging as chemo or any of the traditional remedies that are coming. So if you can have cancer, go into remission, have high quality of life, don't lose your hair, don't lose all of your healthy antibodies, I think that will set the stock market on fire over the next 4 or 5 years.
Yeah. Isn't that like kind of synopsis of how we look at the market now? Like everybody talks about the tech companies. I think most people couldn't name 10 healthcare companies
At all.
This is the biggest business in the country.
Absolutely. It is the business. Tech may get the most funding, but especially in the down market, pharma and healthcare are really the ones to go to. If you want to have a true edge in the market, and they're like the one thing that Kramer has said historically that has been true, there's a bull market somewhere. In the down market, pharma and healthcare tend to do better. In a zero inflation environment, tech will do better. So you have to know what cycle we're in. Interest rates are up, healthcare is up. Ozempic is going crazy. We talked about Novo a lot. I've been screaming Eli Lilly forever, knowing that the interest rates were going to come up. That was a play into the rise in interest rates as well. So you have to know the seasonality and the macro picture of what to invest in as well.
Okay.
Yeah.
So off the backs of that, what sectors are best to invest in a down market?
Healthcare for sure. I love. Third, I would probably look at oil, and then B, I would look at commodities. So I would go healthcare first. Well, no. Let me scratch that. I would go defense. I don't love all defense companies, but in a down market, and if we're going to enter a longer war cycle, which we've been in war forever as a country, I would go healthcare, defense first, or defense second for sure. Those are the three that I would go with. Yeah, so I would take out commodities and pair them with defense.
So historically, this is based on history, obviously. In a down market, utilities, healthcare, and consumer staples are the safest and probably the best investments. This is historically based on the data. Consumer staples make sense. All right, these are the things that we're always going to need: beverages, food, home care supplies, personal supplies. These things we're always going to need, whether it's a bull market or a bear market. Those are necessities.
And we'll get to Coke versus Pepsi later.
Yeah. I was going to say, so
yeah.
We talk about it all the time, and we talk about ETF. So XLP would be, if you don't know what consumer staples are, that would be a good ETF to look at, and just look at the holdings and look at the allocations based on those holdings. So if you're looking at it from an individual standpoint, you can see the companies, or if you want to have a safe route and invest in an ETF, you can see that they have there, what they have there. Consumer discretionary would be something like we always talk about when we talk about XLY, but again, those are things that we kind of spend when we have more than
extra money,
right? This is like when we have discretionary income, these are the type of things we spend on. So you'll find Amazon. So it's kind of the inverse, right? When money starts to slow down, then we go back to the necessities, again, food and beverage, personal items. So healthcare you spoke about, but utilities is something as well.
Yeah.
Again, these are necessities, right? We're going to need power. We got all these things that become necessities in life, or the way is how we should be looking at it from an investment standpoint. What do we absolutely need? Do we need communication? Do we need utilities? Do we need yes. So if we're looking at necessities, we're looking at need. When it's a recessionary time, this is where our focus kind of should be.
The only thing I would say about utilities is you have to know when to get out, because if we're back in a low interest rate environment, you could miss out on an opportunity to get 500 to 1,000% gain on the tech side. So I agree, but it's more of if I had a secondary portfolio, I would follow that. But if we got back to 0 to 3% interest rate, I would have to take profit in the utilities and consumer discretionary, and then go back to, like, if we want to talk rotation, that is a macro rotation that hedge funds do use, not like the quarter to quarter that is often talked about. That doesn't make.
I think we agree. Healthcare is number one. We both agree.
Yeah, absolutely.
But you said oil. I'm interested in why you said oil.
Usually because if oil goes up higher, our economy tends to go down. During war, USO tends to shoot up a lot more, crude, and WTI goes up a lot more. So it's not one that I've always loved. But if I'm looking historically at what does shoot up, oil does go up in that commodity space when the market is down overall. Like if we go to $115 a barrel, which I'm not saying we will, but that will be a sign of suppression in the economy overall. Like VIX is always number one for me, but if I have to pick second, like seeing where the price of oil is a determining factor of where the economy is as well.
Yeah, I remember during the pandemic, it was negative. Remember how
it went negative?
That was crazy.
Well, speaking of oil, so do you think oil will plummet or will continue to go higher in this current economy that we're in?
I think oil will pull back a little bit. Maybe high 80s, and then we'll start to shoot back up. So we're in a very interesting space because we're not clear on what's going to happen with Hamas. We'll talk about Kaiser Permanente in a few. They're going on strike. UAW is still in proceedings. The Hollywood strike just ended. So, and Troy said it, like when it was negative, people began to build positions in oil. I think the highest it got to maybe was $91 about a year and a half later. So we're going to be a place where it's choppy back and forth for a little bit. Ultimately, like oil prices are going to come down because if not, consumers are going to get crushed and businesses are going to get crushed. But I think we'll see prices come down, then shoot back up, and then ultimately go back down in about 3 or 4 months.
Yeah, you know what's interesting, and maybe you could again just break this down for the people who may be unfamiliar, the correlation between the oil prices and when we see conflicts or war. And so over the weekend, we saw oil go up by 4%. Yeah. And so we saw this happen when Ukraine and when Russia invaded Ukraine. It was a conflict. We saw oil prices have volatility. So what's the correlation between oil and conflict and war?
Because we don't control our oil supply as cleanly as we should, because we're dependent on others. So now, of course, I think Saudi Arabia said that they may release barrels to offset the prices so it doesn't hurt everyone during this time, because you don't want a whole bunch of reasons to not invest or for people to be timid. And we probably have 10 of them right now. We don't need another 5 on top of it. But the correlation is like because we don't control our supply and other countries have a vested interest in it, oil prices can continue to go higher during times of conflict because of people are going to keep the reserves usually to themselves. Ultimately, how this always plays out with oil, everyone's worried for 2 or 3 months and it goes down. That would be the same case here. There's also why it's a push for it to go towards EV, so we can have a control of that market cap, even though if we talk about EV isn't as clean as everyone thinks it is. And most of the people in oil will have majority market share in the EV space. But because we don't control our own supply, that's why you will see a lot of price manipulation with oil during times of conflict.
Yeah, conflict, natural disasters. We've seen that before.
Yeah,
it's seasonality. So all these things play a role in when we're talking about oil. So yeah, it's interesting to keep an eye on.
So Kaiser, what is the deal with this Kaiser strike that's going on?
Things we talked about before, and I think musicians may be next if they smarten up. But off the backs of the United Auto Workers striking, 75,000 Kaiser Permanente workers walked off the job with an approved strike. So the healthcare space, I mean, your surgeries may be delayed, your medications may be delivered to you a lot later as a result. But the truth is, and it's not the employer's fault per se, but when inflation is outpacing wage growth by 3x, 4x in some cases, rent is higher than it's been in the last maybe 15, 20 years. People don't want to keep coming to work just to get by. I see a lot of people saying, hey, I'm making more money than ever, and I feel broker than I ever have in my life. And if we don't begin to fix this, we're going to see a lot more industries begin to revolt, to walk off the job, to force their own strike to get more favorable conditions. And for all the employers, this is why I've always said, if you don't pay your people well, some of you podcasters need to listen to, people are going to leave. If you aren't able to pay your bills and not worry all day 24/7 about income, they won't be able to be productive for you. And this is one of the reasons why I say when I lean on a company like Apple that is technically a quasi luxury company, you have more capital to be able to disperse to your employees for research and development, for acquisition. You need a cushion. All the low price providers, like even Dollar Tree, Dollar General, are both going through hell right now, even though they have more people shopping in their stores for food, which is crazy to say. But the workers don't feel satisfied with what they're receiving. And because the margins are so thin, Dollar Tree and Dollar General stock price have been affected dramatically, even though people are going there more often than they used to. So people have to find a way the employers have to find a way to pay better so that people can feel a lot more financially secure in their lives. But this is why I always say you have to invest. This is the only way to outpace inflation. If inflation doubles or stays here for 2 or 3 years, the only thing that's going to allow you to be able to outpace that and not have to worry is having your own business and buying the best companies in the world. This is why it's so important. There's a chapter in Money Master the Game on inflation and why it's so key. Inflation has not come down since 1900. It's only went up. So if you think that even if you had $1 million in 1970 is not $1 million today, you have to continue to find ways to deploy your capital to get more bang for your buck. And if we could be honest, you guys just left the interview. Now we're doing a show. I'm sure you're working on other things that I won't say.
So let's go. Let's do the 52-week low segment.
All right. So we got 52-week lows. Now where they will go, we'll see. Ian, we're gonna run down a bunch of them.
Okay.
We'll start with the Coca-Cola company. We kind of talked about Pepsi and Coke. Let's start with Coke. For those not in the know, the ticker is KO.
KO. I like Coca-Cola only if it goes to $44.13. I'm not saying that it will go there, but if it does go there, that's the only price that I do like it. I like its competitor a lot more that we can talk about, but Coca-Cola isn't as strong as it used to be, and I think this is part of the reason why Warren long ago exited it as his number one position. Good company, but I think it's lost its way a little bit. But I do like it at $44.13.
It's currently trading at just above $52. So okay. Well, let's talk about its competitor then. Let's go with PepsiCo. So the ticker is PEP, trading at about $161.
Absolutely love. Management has done a better job. I think over the last 10 years, stock prices perform better suite of products, better margin. I like Pepsi a lot better than Coke.
Okay, Pepsi over Coke. All right, so let's go to the banking sector. Let's talk about Bank of America. Ticker is BAC. It's at a 52-week low. Where will it go? Currently trading at just above $26.30.
Bank of America. Shout to Brian Moynihan. Shout to everybody in Charlotte and in corporate. Bank of America is a value stock. It's in 2008. Of course, it got to a low of $12. If we look now in 2023, it's at $26. There's probably 70 other companies you could have invested in 2008 and made 1,000% return. They are not one of them. I don't like Bank of America. Maybe if it got to $16.27, or if it got back to the 1982 area of like $12.50, I would take a stab at it. But I don't like Bank of America at all, and that's not because of my affiliation with JP Morgan, the ally. It just underperformed the last 15 years.
Yeah, I'm looking at their chart. Let's talk about a company that has been near and dear to the show. We've probably spoke about it maybe within the first 2 episodes, and we watched its ascension and we've watched it decline. Let's talk about Block, formerly Square, ticker SQ. It is. I got a
rule of thumb. Like if something don't work out the first time, I got to leave it the second time. That's why I'll never go back to my exes. Shout out to y'all. Appreciate y'all. But so her loss. If you watching this, is too late. So with that said, I want to stay away from all commentary regarding Blocks. I'm glad Jack's back. Jack, I appreciate you, right? But this being the only stain on my jacket, Shotty set a pick for me. Flex. Let me get a ball screen. I'm cool.
So what happened? What happened with Block? Because at one time you referred to it as the next JP Morgan. It was up $272, and now it's at $42. So I mean, its fall has been historic.
Yeah.
The collapse.
I mean, you already declined.
What exactly happened?
For Square, the best benefactor was Jay-Z. He did a tremendous deal with them and did some stuff with Tidal. I think, and we saw it happen with Zuckerberg. I think it happens to all of us. Like things can be going well, we get caught off guard. Jack wasn't putting the same amount of energy, effort, and time into it, and then when interest rates shot up dramatically, it killed a lot of the margins tied to Block or Square. And also, when you're betting big on crypto, and crypto takes a big, massive dump in the market, and all credibility is lost, and then the banks begin attacking it. It was like, I mean, even with JP Morgan, as soon as I said that 2 weeks later, they was like, give it 3 months and we'll see if they are the new us. Meanwhile, the same strategy that Square had in Bitcoin and that Coinbase had, they are now adopted and implemented inside of other banks. So, but my thing, if I had a blinder, I didn't think the interest rates would kick up that high to destroy the company, because if so, I wouldn't have said it. But that was the biggest blind spot, if you will, that I have for that company, not thinking the interest rates would tick up that fast.
Yeah, interest rates, I mean, it's kind of double fold the problem, right? So you're talking about a fintech company, and so we know when interest rates rise, that usually affects tech a little bit different, because the price of infrastructure is going to be a little bit different. But when you're talking about a financial company as well, your profit margins get shrunk.
Yeah, absolutely.
Pretty substantially when the interest rates go. So they got hit with like a double head hammer when we think about it, right? Like interest rates from one end and the other, and then obviously that pivot to cryptocurrency. We're still waiting to see how that's going to work out. But the other part is, what was the competitive advantage that they had?
To me, having everyone in at mass scale wanting to use an easy payment provider, they were much better than PayPal. They got people into crypto. But ID and Stripe are going through the same issue. Like Stripe hasn't been able to go public because of the interest rate change. It's affected how a lot of they do business. We've talked about before. And most payment providers are not the easiest to deal with. For a while, they had an edge, the technological advantage. And I think a lot of times when people see some of Elon's like eccentric nature, they try to mimic that. And I think Jack did too much. Not saying that he's not a great executive. And there was a lot of infighting too at Square that led to him not running things the way that he wanted to, which also happened at Twitter. And that led to a demise. But now they got to bring the boy back and see if they can save that ship. But I'm not hitching my eggs into that one basket. Also, too, I'll say very honestly, too, if you lost money on Square, I apologize, but it shouldn't have been one of the top 6 things that you invested in. I've been clear on that. So I'm not caping. I'm gonna put it on my jacket. Wear with pride. You the greatest investor in this generation, but you on the. I talk about all the time. I still am. It's a lot of people y'all adore who ain't put up the pics that I have, but I will hold this one on my jacket and say that if this is my one, you know how like when Floyd got hit by Shane Mosley, people like, oh, Madonna, that could have killed him. That's like, well, if one hit is the highlight of everybody else's career, I'll take it. It is what it is.
Yeah, and you were honorable about that and very vulnerable about that moment. So
yeah,
greatly appreciate that. Let's go over to another one, 52-week low. Where will it go? Target. We're talking about something. Yeah, we saw it hit its high during the pandemic of over $248. Right now, it's trading at about 105. What's your thoughts on Target?
I don't like Target unless it gets to $40.23.
$40?
What competitive advantage do they have over Walmart?
No, I'm asking. I was just clarifying.
Yeah.
Okay.
$40. That's why I personally like it at.
Okay.
At that level. Because if interest rates continue to climb, they had a very miscalculated step with what caused some of this stock to fall. But what advantage do they have over Apple, which is a store as well, Amazon, Walmart, Mercado Libre, Costco. Even though Alibaba stock is not doing well, Alibaba, Costco, like you have some sharks in that retail space. Shein a little bit hotter than Target right now, even though I won't order, but shout to y'all who do. Shein a little bit hotter. It's like, yo, I don't see what the competitive advantage is. Once again, when interest rates are higher and your customer base are pinching dollars and it seems like your goods are getting pricier than ever. Like I know people go and spend $200 in Target and it's like you walk out with 2 bags. It's not a great feeling. So, yeah. And if I'm also comparing things like how much money are they acquiring per square foot, you got to beat McDonald's, you got to beat Domino's, you got to beat Apple, you got to beat Louis Vuitton. That's why I would say from the very beginning, you're not comparing sectors, you're comparing best of breed. Always. And if you can't beat Louis Vuitton in that or Dior, it's gonna be tough. It's gonna be real tough.
So Noriega just put on Instagram, he said, yo, Bitcoin or whatever is called ain't worth SHIT.
You're gonna keep it clean.
What would you say to people similar to Noriega that lost money in cryptocurrency? Because I don't think that I think he's misguided in his statement, but I can understand where that frustration may be coming from.
When somebody comes in and says you can buy an asset class at any price, that's the biggest mistake ever. Number two, you should only buy Bitcoin at maybe 22,000, 25,000 at the highest or below. And the funds and banks are going to ruin all of the fun in crypto to then take it over for themselves. I know I'm not the most I don't know Satoshi Nakamoto, and I don't know. I get it. The prices were right though. Everything comes down to price. Like even everyone who had a $300,000 house and they bought it for $450,000, they are upset today with adjusted inflation. The price of where you buy an asset matters more than anything. So if he bought it too high, I understand why he would feel like that. If he bought it at 22,000 or 23,
I think this comes from a few different things without knowing the situation, but I think it comes from him probably buying too high, which is a lesson for investors. Never buy the high. That's important.
Yep.
I think it also comes from him having a lack of understanding of cryptocurrency. Mm-hmm. That's important. Never invest in something that you don't understand what you're investing in. That's important. And I think that it comes from just a lot of propaganda in this space, good and bad, which causes confusion. So it's good to block out the noise. That comes from being educated. When you are firm in what you know, then the good news isn't going to make you just buy at any price. The bad news isn't going to make you panic. But yeah, I think that, once again, I think that Nori is probably down on crypto because he probably purchased at a high and it probably, has lost money or his account is in the red and he doesn't understand, like, what is, I haven't used it. I've never used Bitcoin anywhere. I've never seen anybody use Bitcoin. What is this thing that cost 60,000 a few years ago? Now is in the 20, it's like, this is stupid. But once again, it's having an understanding and not buying at highs.
Never buy off the hype.
Please don't. And then also a shout out to the Yalla, but understanding the difference between trading and investing. Right? Like he's saying today is not worth something, but in 5 years he might have to revisit the conversation and have a different take on it. But yeah, I mean, everything Shai just explained is why this is important. Having these conversations is important. Educating people about the asset class is important, and having platforms with people who are actually knowledgeable, who've done these things, right? So we can learn from people's mistakes is also important. So shout out to the Yalla, man. You guys shoot him a text, let him know.
Yeah,
all right, man.
Yalla.
Yalla. Tap in.
Yeah, that's our guy.
Tap in.
I mean, and let me say this too. Like, I can stand accountable on Square. That's one out of however many stocks. Cool. Where's everyone who was advocating for it when it's not working? A lot of those people got quiet. I'm tired of people treating this like a hustle, podcasting like a hustle, investing like a hustle. It has to be a lifestyle. But by the time most people get enough courage to want to copy, they'll put out 1 or 2 episodes and it's like, y'all got 14 in the can. It's like, come on, master a craft. Everyone, please put in chat, master a craft. If Nori, anybody else needs help, I got you. But when everyone was screaming, it's going to go to 100,000.
Let's do it. Let's go back to this because it's like a few more. I don't want to spend too much time on this segment. But there's some pressing issues that we have to talk about. There has been a conflict that has happened in Israel this weekend between Hamas and Israel. So yes, this is a very delicate situation.
Yeah.
But very important to world politics and to the world period. It was just on the eve of, well, not the eve, but it was coming up on Saudi Arabia trying to allegedly broker a peace treaty of sorts with Israel. So many people think that has the timing has something to do with it to try to sabotage that that peace treaty situation. So it plays a part on the world economy as well. First and foremost, people's lives is going to be lost, so that's the most important thing. But it's also going to affect world economy. Stock market has not been impacted so far. What is your thoughts on how this could potentially play out, and what impact could it potentially have for everyday people?
I want to touch on that from a investment perspective, not so much a political perspective. Normally, when there's any wars, a threat of a war, the worst that it usually lasts is 24 months. I don't see this affecting the stock market alone for 24 months and maybe 3 to 6 months. Russia versus Ukraine was different because I think most people got the timing wrong of how long the Russia versus Ukraine conflict matters. So if we're looking and making a table, Russia, Ukraine is number one. If China ever invades us or Taiwan, that would be number two. And even though this conflict is devastating, it won't have that much of an impact on the market long term. So I would say continue to invest for the long term in the top companies and you'll be fine. But this is just one of the added things that is happening in the market because we have so many other things that is broken in the market. It sent the market down Sunday night, but as of today, we recovered. So we're good.
Yeah, I also think it's important to understand what the conflict actually is. And so from a historical perspective, we need clarity. And I know like history is one of your things. And I actually love listening to you talk about history. So could you just break down what the conflict is? We're talking about Hamas, we're talking about Israel, Palestine. Like, can you summarize that for the audience that who may not understand what is happening or the history of what has happened in the past?
Yeah. And I'm not a historical expert on this matter, so I don't want to, go too deep into it, but I'll just give a, an overview of sorts. And it's been an ongoing conflict between the Palestinians and Israel for over 60 years now, when the Israeli state was established, with the help of European powers in America. And it was previously a country called Palestine. So, the idea, what people would like to happen was a two-state solution, which has never really effectively happened. It's not a country that has been able to thrive as far as Palestine is concerned. And Israel has had security issues because the Palestinians and Hamas and PLO before that has been having ongoing conflict. And it's something that has impacted, especially the Middle East for sure. And you see allies from Iran, Syria, and different parts of the Middle East that have banded together with the Palestinians for their fight for their independence. And America and most European countries have heavily supported Israel throughout the course of their existence. So this is a very complicated issue and something that has a lot of historical meaning because Jerusalem and Israel, that's the Holy Land, right? And that's where all three major religions have sacred ground: Christianity, Islam, and Judaism. So it's been a very unfortunate situation because thousands of people have died for years. And it's something that has never come to peace since it started. It has never been in peace. From that two-state solution has never happened. And both sides argue against the other side. So this is something that when we see what happened this weekend and Israel's response, I'm sure is going to be very hard, and probably thousands of Palestinians will end up dying, which happens. It seems like every couple of years these type of unfortunate events happen, and there has never been a president that has been able to broker any peace. That's been something that a lot of presidents have tried, including President Obama, but none have been successful. Egyptian president tried to have peace, and think he got assassinated for that years ago. So yeah, Saudi Arabia has been the latest to try to broker peace. That doesn't look like that's going to happen. So yeah, it's one of these things. UAE just opened up flights, I believe, last year to allow citizens from Israel to come to Dubai and Abu Dhabi, and I think Saudi Arabia just opened up some levels of communications and flights as well. So yeah, very extremely unfortunate situation that seems like it's a never ending fight, and it definitely impacts people. You have religion, so whenever you have religion involved, that's gonna play a major part, and rally strong emotions from both sides, from Jewish side, Islamic side, from a variety of different people, and other people that don't have any fight in it, but they still have feelings and emotions that are tied to it. And there's a lot of money. There's a lot of money that have been spent on supporting Israel. There's a lot of money that has been spent to try to help the Palestinians on the Arab side. So yeah, that's the quick overview of it. Like I said, I don't want to disrespect the situation by trying to speak in like facts, like I'm a historian on it, because I'm not. But that's some level of understanding that and then of course you can seek your own level of research if you're into it.
Great overview.
Yeah, I appreciate it. I think that gives some clarity for us who are just watching news clips, or we're watching the news, but we don't really have the history of it. So I mean, I think that was a great take on it. Appreciate you.
Yes.
Absolutely.
So okay. All right. Switching gears. Let's talk about Nvidia. So Nvidia has been a stock of the year that everybody has been talking about. And it was 52-week low was $108. 52-week high was $502. But since it hit $500, it has dropped almost $50. Around the 452 range. So okay, is the Nvidia hype over? Will it have a new bull run? Is it time to invest in Nvidia? Is Nvidia overpriced? Will it split? Will Nvidia split? What's the deal with Nvidia?
I hope it does split, but from what I'm hearing from a couple people that work inside of the industry, Nvidia has another chip that is going to come out that could change the game. So I would say put Nvidia back on your watch list. So if you missed this first run, we have to argue that their CEO probably is top 5 right now. If they come out with another chip that could change the game like this first one did, it could definitely send the stocks soaring higher. If it goes above 700, at some point they are going to have to split to make it affordable. But Nvidia in this decade may be cementing themselves as one of the new power players for the next decade. Kind of like we had Fang in the last decade that was dominant. They're going to be one of the players that's most dominant in the space and in the market overall. So I would definitely begin to put it on your watch list. And at the Chicago show, I will give you a price to look to buy into Nvidia if you missed it at the top of this year or last year. And if you made money off Nvidia, please put yes in chat. But at the Chicago show, October 22nd, I'll give you a price of where to enter.
This is an interesting time. It's an interesting time for Nvidia. I'm glad you brought up the price, because there is news that OpenAI may be looking to use a different chip supplier outside of Nvidia. So that is interesting. There is also some news. So I like when Ian says, from what I'm hearing, from what I'm hearing, there's a company out there named Microsoft that is interested in creating their own chip, which is also an interesting proposition for Nvidia. Do I love it long term? Absolutely. But when you have companies coming into a market, especially like a Microsoft, it does take time. And just because they're saying they do it, it doesn't mean that they'll have it next year. It might take 10 to 15 years for them to create the factories and to create the machinery needed to create these waffles that make the semiconductors. But the fact that they're coming into the space tells you that this is a space that's going to be here for the long term. Nvidia is the leader now, like we said a couple of weeks ago. I think for the next 3 to 5 years, just because of the amount of time it takes to get a business like this up and running, or to get the machinery up and running to compete in this space, they'll be ahead. over the next 10 to 15 years,
Yeah,
there's going to be some challengers. The fact that Microsoft, and I think next month they're going to announce it, that they're coming to space to create their own chips. I think Apple follows suit. I think Amazon's they're already following suit. So that takes some of the market lead that they have. So it'll be interesting to watch. But what we're about to see is we're going to see the AI chip wars. That's what we're headed.
absolutely.
AI chip wars is what's on the frontier for the next 5 to 10 years. So they're leading now, but definitely watch out for that Magnificent Seven. All of them are going to have their own version, which is going to cut into that market lead that they have.
And I'll say too, if whatever tech company is not focused on making their own chips, they're going to get left behind. This is the equivalent of like a AI assembly line, because in order for Microsoft and Apple to really be dominant in tech, they're going to need their own chips to be able to run the processes as fast as they need to. But this is why Nvidia needs to counter with the superior chip. Mm-hmm. So of course, if Meta comes out with one, which I believe they will, Apple, Amazon, Google, if Nvidia remains in pole position with the best chip, they can remain a market leader. But if you have 5 or 6 competitors clawing at you every day, going back to what we were talking about last week, that's why you have to stay on your grind every week. I know people always give you pushback for when you say that, but if you are not ahead of the competition, at some point you're going to be a laggard and you may not be able to ever catch up. That's why I always bring up IBM. IBM was really big in the AI space in the 90s and early 2000s, and they lost it.
Yeah. And what they need, this is the interesting part, right? The price point is what gives it the advantage now. But if these 5 competitors come in and they're making equivalent, not even a superior chip, but an equivalent chip or superior chip with a lower price point, we've seen Amazon do this plenty of times.
Yeah.
They come in, they see the competition, they make a similar product, they drop the price point. You can't compete because most people are going to pay for the thing that costs less, even if they have equivalent service. Not superior, but even equivalent at a lower price point. That's going to cause damage. So definitely is the reason why you got to stay ahead of the game and make sure that you're always being innovative.
And my final point, another thing that quantitative easing does is it makes everyone compete. When interest rates are low, you can get money for cheap. Everyone gets a little bit more comfortable. Quantitative easing goes away, interest rates are higher. Now you have to fight for less customers, less clients. Everyone has to innovate a lot faster to stay in the lead.
Let's talk about Tesla. Tesla's stock dips after China EV sales fall by 11%. Is now a time to buy. It's now a time to buy Tesla.
I mean, I know this is a sensational headline, but in our market, the stock only dropped 2%. It's a non-factor. Tesla can go up 2% in a day, hour, a couple minutes. So I still like Tesla long term. I wouldn't factor this in to be the most important thing. They have a couple other issues I think they need to fix, but I'm not worried about this drop in EV sales in China as a catalyst for me to be out of it.
Are you worried about the continuous drop in the sales of the vehicles? We spoke about this, about cheapening the product, lessening the cost. We want to take the volume play. Are you concerned about it? Because they just dropped the price of the S, the Y models. What's your thoughts, man?
He gonna learn. You gotta take them prices up. You have to pick if you're gonna be luxury or economy. Being economy is not the vibe, especially if you're an automaker. I know he wants scale, but scale with little profit margin is a recipe for disaster. Like if you compare LVMH, luxury products, they have a monopoly on the luxury market. I would say there, Apple has the same. When you begin to play price wars, they all usually go out of business because you need the money for research and development. You need more executives there. I think it's a huge mistake. So yeah, those numbers do need to increase because you can't decrease price and decrease the number of units that you sell. And it's really hard to have exponential growth decade over decade in any market. You got to pick one. I would have them raise their price immediately.
Let's talk about war-related investments. There's a few of them. What does this mean? Like this is like military companies, that's military supply companies?
Yeah, or have exposure to defense or war. This is a hedge. If a war breaks out, these are some of the ones that you could potentially invest in.
All right. So there's a few of them. You want to go through them? One of them is GD.
Yeah, General Dynamics is one of, I would say, that is best of breed. So if I'm looking at it right now, it's at $238. I like this stock a lot. So since 2008, I mean, it was at $41 in 2009. Great return. I do like General Dynamics a lot if we go into a war or if we stay in this environment where things are tested between the Israeli conflict, China and Taiwan, and Ukraine and Russia.
Well, you say when we go into war, what do you mean by that?
I mean, well, America, I think, since inception, has only been out of war 17 years. So we always are fighting some conflict or have some kind of allies that are in a conflict. And it does have an impact on our economy as a result. So not that we're like in a direct war, if you will, but the Russia-Ukraine conflict, which I won't go into too much, is having an impact on our economy. And we're putting way too much money into Ukraine. I always say it like, why are we deploying billions of dollars when we have homeless people in every major city that are going through an economic crisis that they've never seen since 2008? So if capital is leaving, even though we may not have boots on the ground, it is still technically our war.
So if that's the case, right? I mean, that's a pretty interesting statistic. We're always finding somebody. You talked about that company. What are your thoughts on a company like Raytheon, whose pretty much the mission is to fund and create missiles, create technology around defense systems? What are your thoughts of having something like that in a portfolio long term? When we talked about companies that we should be looking at, defense, right, is one of those things. If we're talking about we're in these times, so what's your thoughts around like a company like that?
I like Raytheon at $57, or if I can get it at 65. Stable company. You can argue there are some companies that give better returns, but it's one of those ones you don't have to think about. General Dynamics will go in that same portfolio, and then of course Exxon. If a war increases, the profitability of oil-based companies are going to go up as well. So I like those three as a parent: Raytheon, General Dynamics, Exxon, as like a military or war-based hedge portfolio.
So that's like its own ETF you just created.
Pretty much, yeah.
We're gonna call it the defense ETF. So you got some oil stocks, you got some machinery stocks, and you got some defense systems stocks inside of it.
Yeah. I mean, because the thing is, like, no matter what happens in the economy, your job as an investor and a person that is battling a recession independently, you have to know how to make money regardless of what market that you're in. The thing that makes Luka real dope, Kyrie real dope, KD real dope, LeBron, they can get a bucket in any scenario. So if you're not able to do so with your portfolio and your business, you're going to be in a tough spot. I will add Chevron to that, ticker CVX to that portfolio as well. And that would be the four that I would look at to round out my defense portfolio if the political climate is favorable of more wars.
All right, so we got CVX, we got GD, we got XOM, and would you add
Chevron?
Would you add
right there?
All right, so let's put RTX inside of it as well.
Yeah, absolutely. Because they keep saying, "Oh, 2Tech, 2Index, what else?" I'm like, I get people want diversity. Sometimes diversity is overrated, but if we're going to be in like a war-like scenario, and often wars happen when money is not flowing as readily. People are fighting for less resources. Like when money was flowing and everything was fine, we didn't have the formation of BRICS moving as fast and all of these wars and talks of Taiwan being taken over by China. Like we had a lot less threats. When the money is not flowing, that is going to lead to a lot more war-like scenarios that we have to face.
Yeah, and you got another company inside of there because war looks different in these times and days. Fortinet, which is more of a cyber security type situation. So talk about that, having that as part of the, I guess if we're creating this war-based ETF, having the cybersecurity component as well.
You have to have one because at some point, a lot of the attacks are going to be digital and internet-based and not just boots on the ground. Even when the thing happened in Caesars, my first thought was, man, what if an enemy combatant got a hold of 7 or 8 of our biggest companies and drained them or held them up for ransom to get billions of dollars out of them? You have to be protected and look at every side of the game to see where, if this does break out, how you can protect yourself and be able to make money for you and your family.
Okay, got you. And for those that are taking notes, because I know a lot of people write down their notes, Fortinet, the ticker is FTNT. FTNT.
I would keep that on the watch list. It's not one that I will put as number one for all of you who like to do review videos, but I will put it on a watch list. Review how much money you have. Kindly. Shawty tired of me today.
Review your account. Account review.
Yes. Yeah. I mean, also too, like House Speaker got kicked out.
Yeah.
The Treasury bond market I've been talking about is one of the worst crashes in history since March 2020. T-bonds with a maturity of 10 years or more have fallen 46%. This bond route is worse than the one we saw in 1981, where the yields almost hit 16%. Small bankruptcies have been rising. We are in a different environment.
Yeah,
it's like the bond market is supposed to be a beacon of safety, and it's performing like the 2000.com crash. That's troubling if you've been in a 60-40 portfolio the last 5 years. Tough. Crypto fell, T-bonds fell, Airbnb got litigated out the market, podcasts fell, but you have to find a way to be profitable and get a bucket in every market. This is why practice is really important if you're going to trade. That's why knowing where to get in on crypto at the right price is key. Prices presume overall. And I know sometimes it may feel like we're coming off to be salacious. It's not that, but like there's signs of the times that are happening in real time that the economy is turning and we don't see light at the end of the tunnel yet. Leadership bad, interest rates are high. The Fed looks scared when they talk. You want to know a real sign to know if things are going well? Look at the Federal Reserve Chairman and see how confident he is when he's speaking, or if he's telling you through his body language that things are going to be tough for a little bit of time to come. If the Fed chair is concerned, you have to get prepared. I'm not saying this to scare anybody. If I made you money, please put yes in chat. But when I'm looking at this as an investor, usually we have 3 or 4 of these things happen at a time. We now have them all happening in succession at one time happening, and everyone's acting like everything's okay, and it's not.
So there's a tweet out there saying that Congress has been buying defense stocks.
Mm-hmm.
What to make of that?
They're playing within the rules of the game. Shout out to Queen Pelosi, the greatest trader of all traders. If they're buying defense stocks actively, it tells you that a war probably could break out.
Well, has that been verified, or is it just a Twitter rumor?
You can go to Senate Stock Watch. I have no affiliation. You can go to Senate Stock Watch, Quiver Quant. You can go there and see what they're actively buying. It's true. It's true. Hypothetically, whenever these bills are about to get passed or we're about to go to war, they just know a couple weeks in advance what to buy.
6 months out.
Yeah. So, and that's also another signal of what could come, because if they're hedging with that, when this wasn't normally the hedge, normally it was Tesla calls and Nvidia calls and Apple calls, and now they're going to defense. Now they're telling you, hey, this could be coming, or I got a bug in my ear for what could be.
Do we know what companies that they're actually invested in?
I haven't been able to find them yet. Trust me, I've been hunting. Hopefully by next week I can find them, but if not, definitely at the show in Chicago, October 22nd, I will have them for you.
I feel like that's always the interesting part. Like we'll hear that they're investing in companies. I remember when they were doing Apple and they did Disney, and when they were, they had puts and they had calls on it. We found out about it like 6 months after or 4 months after, and it was like, all right, well, they already reaped the benefits. They probably got in and out of these positions already, paused, and we're just reading about it. So I wonder if I know that they're trying to put laws in place that Congress and people in political power can't trade, or they shouldn't be allowed to. But it'd be interesting if they could have them what they're actually doing, since they are public figures, and they they have influence and they have advantages in having information that we don't as a general public. If they could have a live ticker of the things that some of the things that they're actually investing in.
That would be great. And for everyone who's wondering, they are playing in the rules since they report it. It is technically not insider trading if you report it within a certain amount of time.
Right.
But I will go to Quiver Quant, Senator Stock Watch, or you can just Google Congress trades, and there's a bunch of sites that'll tell you what they're actively in. Yeah. I haven't seen Pelosi invest in anything yet, but if so, she is a market maker for me that I will look at.
Yeah, and she, I feel like her minimum investment is $500,000 every time she does it, anywhere between $500,000 to $2 million. And so we're talking thousands and hundreds of thousands of shares of when she gets into a company, which is good to know, right? Like there might be a piece of legislation that gets passed that's going to be beneficial for the investment that she's making, or it could be detrimental, and now she's making puts on that company, which is sort of, I mean, you talk about competitive advantage. That's a good one.
That's a hell of a one and a half. That is a hell of an advantage to have for sure. Also, it does tell you about position sizing, for what her net worth is, how much she's risking on every trade, and also how long she stays in those trades. It's a good homework assignment that I think everybody should follow.
Yeah.
All right. Well, Juicy J has issued a call for a meeting. Have you seen that?
Word to Juicy J.
He's saying that rap sales are down 40%, and it's has reached urgency levels.
I agree.
He's calling all music heads to come together and have a meeting about the state of rap music sales being down. He said, "This is how we eat. So if we can't sell records, then we're in trouble."
Word to Juicy J.
Yeah. What do you think?
I think that the landscape has changed. I think people we was talking about this with Slim Thug. Afrobeats has taken over the world. You got reggaeton taking over the world. So I just feel like there's more to choose from, right? As opposed to the days when everything was just rap or R&B, but mainly just rap, hip hop. So there's still people that selling records, obviously, like Drake and those type of people, 21 Savage and stuff like that. But it's difficult from a business standpoint. I think the business model has to change. I think more creativity has to be displayed, and
diversity in sound is needed.
I think there's cycles to it. I mean, I remember when hip hop wasn't the number one genre when it came to consumption of music, and it was country music, and then finally, or it was rock music, and then that got phased out, and then hip hop became the dominant consumption of music, but in culture, and it's been that way for the past 15 to 20 years. But even when we talk about Afro beats and different forms of music, the sales don't match the way that they used to, right? People are not consuming the music at the same level. So yeah, you do have a Bad Bunny, and of course you have a Beyonce, or you have a Taylor Swift, and you have a Drake. But when he used to do, 1 million albums sold in a week, he's now doing 400,000 in a week. And Travis Scott is doing less. And we won't even talk about some of the other artists who have put out music that have, so far less than that. But even how they calculate it, I mean, I feel like it's a skewed number, right? Because with the eye test, when we look at some of these people and they perform in stadiums and they perform in arenas, and there's 20,000 people there every night in every city, I mean, you would assume that a fraction of that population is going to consume the music. So, I mean, it's interesting. I don't know where he got the statistics from, but I like the call. I like the call out.
I think that people actually are just not, the attention plan is different too. Like now it's so much with streaming and everything. Like even I talk to my son, I'm like, "What's your favorite rapper?" He's like, "I don't have one." So it's like he listens to rap music, but he's not like, hardcore, like, fanatic on any one artist. And I think that, there's so much stuff with video games, with streaming, with Instagram, with podcasting. Like the fight for attention has never been higher than it is now, which obviously, it affects other genres, traditional genres of attention, like music. So I think that might have something to do with it as well, where so much kids is watching video games. They're watching people
play video games
for hours. Like that's what they're doing for hours.
Like, here's the other piece though. Is the music good? I think, I mean, let's just talk about that. Like, is the music good? Right. So like I would use like SZA's album, for example. We put this album out in December. It's been a top 10 album since its release. There's been 5 number 1 singles. There's been hit after hit. The music was good, and so sustainable, right? We're listening to projects that they come out one week and then somebody's next week, but we never revisit it because the substance of the music wasn't good, the relatability, the topic of the music wasn't good. And so that I think when he calls out that part of it, there's a call to action that needs to be had. We got to get back to actually making music that's good. And that's why, I mean, even shout out to Puff. Like when I heard the music from the Love album, like, oh, this reminded me of R&B. But there's a generation that never heard that sound.
Yeah.
Something that might be good to us is like, well, what is this?
But can the music be good if the industry isn't paying well? Like I remember last week I was having the same conversation online and people was like, well, yeah, people aren't relying on record sales. And I'm like, if they convince an entire generation to tour for money and your record sales don't count, if any other business did that, that would be a Ponzi scheme. Also, the music industry got in bed with Spotify because they let Steve Jobs ruin the music single format and sell them for 99 cents. So they didn't want that to happen again. I think 3 labels own 70% of Spotify. Okay, great for them. But if you put in streaming and people don't care about artists' longevity, are you then cannibalizing the same thing that you're selling? Like, I think musicians at some point are going to have to strike. Like, imagine if YouTube said to us, hey, just put out the show for free. I know we used to pay, but that's ours now.
Different
And
business
artists
model.
are going for it, different business model. You got to adjust. And if you keep letting people rob you, why would they do anything differently?
Hip Hop Summit.
It's needed.
Hip Hop Union. Benny Siegel told us that 20 years ago. There's no union, no dental plan. I can't eat off 100 grand. I got cavities that need filling. We still haven't seen it happen.
Yeah.
Will not happen probably. Sad.
All right. Well, it's been real, ladies and gentlemen.
I love your abruptness, man. I ain't even gonna lie. Like, all right, let y'all figure it out. Album ain't doing well. Podcast ain't doing well.
Good luck, rappers.
Good luck.
So,
Good luck.
Good luck, so-called rapper.
When this flip, I'm gonna get on some other.
Yeah.
Jay told y'all
For
that,
real.
man. 96, man. Like,
Told y'all long ago.
it is what it is. But yeah, you know, for the people who have been wanting less social commentary on Market Mondays, this is your episode. We talked very minimal about anything other than the stock market and investing. So if the views aren't tremendously higher than this,
We're going right back to Brittany Renner.
Joe Budden and Drake. Joe Budden and Drake will be the opening topic next week.
Big facts. 3 segments.
The first monologue of the year.
Yes.
Big facts.
Yes.
Absolutely. Shout to Ish, shout to Mel, shout to Joe.
For all the
Shout out
dogs.
to Parks for catching a stray.
For all the dogs.
That was crazy.
Mark
That was
Zuckerberg.
crazy.
Mark Zuckerberg.
Call the boy
That's crazy.
And shout out to 21 Savage for being able to lead the country to tour. And congrats to Drake for having a successful tour. Got to catch the show. I know he closed it out in Toronto, so congrats to him on that.
For all the dogs.
For all my dogs.
Yeah.
All right. Well, tomorrow, Van Jones, legendary situation.
Super important, y'all. Go check it.
Leisure, 1 o'clock Eastern Standard Time. Get your tickets to Market Mondays, Chicago.
Can't wait.
Ross Mack will be in the building. 19 Keys will be in the building. Giveaways will be done. Other surprises.
Presentation.
One night only.
Yes.
Midwest.
Yep.
The whole Midwest. Come out.
Yeah.
And get your education, highest level possible. You will leave with life-changing gems.
That is a fact. This Saturday, we're back in New York. SelectCon. Pull up on us.
Hey.
Shout out to the good folks at United Masters. We will be at SelectCon. We will be talking to Elliot Wilson. Will be interviewing us.
I saw that. That's dope.
Yeah.
Shout out. I'm gonna hold my take about hip hop journalism till next week. We're gonna see what these views like.
Yo, man, from reading the Double XL in 1997 to have this moment, it's pretty surreal. Shout out to Elliot. Shout out to Stout. Shout out to the whole UM team. Dave, Eden, everybody, man. Appreciate y'all.
Shout out to the good folks at United Masters. We will be up there this weekend in your New York City.
We're back home.
Coming home. All right. It's been real.
Yeah, I love y'all. Stock Club call Wednesday at 9 p.m. Central. Can't wait to see y'all soon.
Area 21.
29.
We done.
That's the magic they make happen. You know what I mean?
If you know, you
donations.
Know. Recruitment. The recruitment tour.
If you know, you know.
Earn your recruitment.
Support black business.
That's a fact.
Is this who you put your faith in for your financial advice? Yes. Yes. Yeah. Name them who better.
Man.
Oh, man.
All right, guys. Been real. Tap in.
All right. Be good, y'all. Love is love.
Peace.
Peace.